Hello and welcome. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me is Ankita Saxena. And viewers, in the next 1 hour, we're going to be highlighting all the buzzers in trade right now. The markets are giving great moves. So one by one, we will be taking note of which stock is moving on the back of the news flow or on the back of the technicals. We will connect with our researcher as well as our technical expert for today. But before that, let's take a quick look on the markets. So stellar run-up on the benchmark indices. Ankita, record high level coming in for both the benchmark indices.
Absolutely, Shrishti. It is TGIF. It's thank God it's Friday because Friday cheer is back in the markets. Yet another day of record high levels. In fact, Nifty managed to touch those 25,800 levels, and there is a chance that it might regain momentum and go back to those levels. But Nifty Bank is also mirroring the benchmark indices. It's trading with gains of 600 plus points right now. There it has cooled off a little bit, but it's nonetheless trading with gains of 243 points right now. The broader markets though have seen recovery since the last 2 days, but they're still underperforming the benchmark indices. Sectorally also, all sectors are trading in the green, with metal pack leading from the front. It is on the back of the note that Macquarie has come out with, and they have upgraded the sector. Specifically, they prefer JSW Steel, and on the back of that, JSW Steel is trading with gains of 3.5%. Couple of stocks that have also hit their all-time highs. There's Zomato, there's Max Health, there's also ICICI Bank, which we saw hitting the 9 lakh crore market cap. It's steadily hedging towards the 10 lakh crore rupee mark now. So these are the names that have hit all-time highs. The defense pack is also in focus. It's bouncing back after a rather somber or a tepid 1 month that we have seen for the defense pack, like Cochin Shipyard, Mascar Dogs, Garden Reach. All of them are doing pretty well in today's trading session. So largely the market breadth is tilted in the favor of positives because in the last 2 days we've been seeing that second half playing a spoiled sport. But this time round the market breadth is also pretty positive and strong, Shrishti.
Well, certainly, that's well highlighted. All the beaten down counters are once again coming up with a strong comeback. But with this, viewers, let's move on and let's connect with our technical expert for today as well as our researcher. Juna is joining us on the research side, as well as Dhwani Patel is with us on the technical front. So let's get it started. And the first counter and first couple of stocks that we wish to highlight are from the pharma space, that is Lupin as well as Tyres, because a very important news flow coming in for both of these companies, not on the positive side, because as the companies face a major setback in the Mebitrac litigation. This is one of the key drugs that is used to treat the situation related to the overreactive bladder, and has a brand sales of around $700 million in the US. And on that, the companies back in the month of April itself have gone ahead and launched this particular drug in the US market while the litigation was on. But now the US Court of Appeals has vacated a US District Court judgment that favored generic companies in the patent litigation around this particular drug and remanded the matter back to the District Court. What does it mean? That in the near term, both of these companies could face some hit on the back of this particular litigation. As of now, what these brokerages have also done is they have gone ahead and cut their target price on multiple counters. Firstly is Incred. The Zydus has cut their target price to 1,330 rupees versus 1,434 rupees earlier. And BofA has actually cut their target price on both of these counters. For Lupin, they are now targeting 1,560 rupees, which is significantly lower than the current market price. As well as for Zydus, they are looking at a target of 1,145 rupees versus 1,310 earlier. So on the back of this news flow, both of these stocks are in focus.
All right, so that's Lupin and Zydus Life in focus, but the Adani Group is also in focus. In fact, so is ITD Cementation, and it is in the back of the fact that Adani Group has emerged as a frontrunner in the race to acquire the promoter's 46.64% stake in the ITD Cementation India to bolster its in-house civil engineering capabilities. Now, the current market value, a successful deal, would be pegged at around 5,800 odd crore rupees or $700 million, inclusive of the fully paid open offer that will follow a promoter stake purchase. Now, the ITT cementation India's share, in fact, was soaring. It's up almost 20% now following the reports. And the report said that both the parties have reached an agreement earlier this week, and with a formal announcement that is likely to come out anytime soon. So on the back of that, Adani is trading with gains of 2%. ITT cementation is soaring away, trading with gains of 20% in trade.
Right then, moving on, let's talk about Apollo Tyres then. And Dhwani, a very good afternoon and thank you so much for your time. Take us through how you're spotting Apollo Tyres on the technical front.
Very good afternoon, Shrishti, and to everyone else also a very good afternoon. And talking about Apollo Tyres over here, it's on the technical radar for the reason being on the short-term side over here. We are seeing an upward trend into it. If you pull out the daily chart of the structure over here, we are seeing the bounce coming in from 475, and it's a higher high, higher low formation in terms of the trend over here. Whereas if you look at the broader structure as well, the stock has been trading into a range. On the higher side, we are seeing 565 as working out as a resistance, whereas on the lower side, the same level as 475 is working as a support. So it's a zone trade that is coming in over here. We are looking up at a target of the swing high of 565 positionally in this particular counter. Given a stop loss on the lower side that one needs to maintain over here is going to be of 500.
All right, moving on from Apollo Tyres to Phoenix Mills. Jinay, Phoenix Mills is reeling under pressure. It's trading with cuts of 1%. Tell us, what's the news flow?
Well, as the stock is trading down, but what the company reported yesterday, the company's wholly owned subsidiary Casper Realty has been declared as the highest bidder for 2 prime city centric plots in Punjab. Now this plot cumulatively spreads over about 13.14 acres. Now Casper was declared as highest bidder with a combined value of approximately 891 crores for these plots, and the payment shall be done with the timeline stipulated with GMADA. Now both these plots are classified for commercial use, and the company intends to develop a retail-led mixed-use development on this parcel. On back of this, Phoenix Mills definitely will be in focus in coming time.
Certainly, that's the news for coming in on Phoenix Mills. But Chris Ford of Jefferies reiterates his bullishness over India's property upcycle. He says that it is here to stay, cites pent-up demand and declining inventory as the key triggers. Let's go across and listen into him.
In the big picture, we've entered the 4th year of a recovery after a 7-year downturn, and during that downturn, real estate prices went up less than income growth. So my view is there's huge pent-up upgrading demand. I believe the inventory in the top 7 cities is in a multi-year low. So what should happen is that the property recovery should gradually broaden out. In terms of it's been led by the high end, that's what normally happens. And hopefully that's what normally happens in a property cycle. The high end leads the recovery. And hopefully we should get some rate cuts in India in the next 12 months, and that will allow, that will cause property to become more affordable in price levels, lower price levels, such as below the equivalent of $200,000 for a unit. So I'm hearing 500,000 property sales projected in the top 7 cities this year. Basically, the amount of properties being bought in India is still very low, what we've seen in China at the peak. So I think from right now, I think we should hope that the property cycle can run another 4 years. We're just entered in the fourth year of this upturn.
All right, moving on then, let's get started with the stocks that are in focus in today's trading session. Dhwani, you picked out the ITC for us. ITC, has given returns of like 20% in the last 6 months. It hasn't really moved much in the last 1 month. Tell us, what are you seeing on this counter on the charts?
So of course, this is one of the counters that we always look up at levels to buy into. If there's any dip, if there's a consolidation breakout, that's where ITC, it comes into focus. What I'm looking over here in the charts right now is that on the weekly structure, as well as on the dailies, we are getting a confirmation of a consolidated range breakout that we are talking about since past 1.5 months that we are forming into. On the lower side, the base is formed around 490 levels, and on the higher side, the resistance of 515, 520 is here to see the breakout. On the weeklies, we are seeing the directional move index crossing above its average over here, and we are also seeing that it's moving towards on the positive side. So a trend confirmation is what we are getting over here. From the current levels, a buy can be initiated. Stop loss on the lower side that one needs to maintain is going to be a 495. On the higher side, I'm looking up at two targets over here. On the first target, I'm looking up at 550. Given it sustains above 550, I'm also looking up at, given with the time period of 2.5 to 3 months, 570 is what we should be watching out for.
All right, that's the day coming in on ITC. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more buzzers to highlight.
Back at you into Market Fatafat, where we are taking you through all the stocks that are in focus on the back of news flow or on the back of technicals. So let's get started yet again. Dhwani, Vedanta is the name that you have picked out for us. This downturn in the last few weeks, actually 4 odd weeks, it's seeing some bit of a consolidation. Tell us, what are you seeing on the charts for this one?
Absolutely. The stock is seeing a consolidation over here on the weeklies, and what is noteworthy on the technical front is that we are nearing the breakout of that consolidation over here, and on the smaller time frame it suggests that the breakout is going to be on the higher side over here. On the conservative side, I'm looking up at a short-term trade over here, first of all, to verify the breakout at 475 levels. So it's a buy coming in from current levels for a target of 475, and on the lower side, the stop loss that one needs to maintain is going to be of 443 over here. Given the breakout sustains above 475, it can also be held in for a longer period of time where we'll see higher gains coming in. But for now, the first target is going to be a 475.
Alright then, that's the day coming in on Vedanta. Moving on, let's shift focus to Vodafone Idea then, because as we know that the final verdict is out with respect to the AGR dues, and just yesterday we have seen a sharp knock coming in on this particular stock, though after that there were a lot of brokerage notes that have gone ahead and actually cut the target price on Vodafone Idea close to 10 to 12 rupees. But one of the standout brokerage notes today was coming in from Nomura, where they have gone ahead and upgraded the rating to a buy from a neutral rating earlier with a target price of 15 rupees. What they are saying is that the worst is now behind us. AGR overhang concludes, and the recent sharp correction with strong industry outlook provides an opportunity to buy this particular stock. Now, the government's support can materially ease Vodafone Idea's funding gap as well. Is one of the other factors that they are highlighting could be at play for Vodafone Idea. But for now, the stock continues to slip in the red and continue the momentum downwards, and what we are seeing is that the stock is reeling under pressure.
All right, moving on from one telecom player to another one, Bharti Airtel is also in focus. This on the back of the fact that the Airtel business, the B2B division of Bharti Airtel, has announced a partnership with Cisco to introduce Airtel software-defined branch, a comprehensive cloud-based network solution designed to streamline enterprise networking. Now, Airtel ST branch aims to provide organizations with a centralized platform for managing complex network needs across the multiple branch locations. Also, there is a note by Morgan Stanley on the telecom space, particularly focusing on Airtel. It says that the lack of potential for AGR relief is a big negative, but they believe that the competitive position of strong players like Bharti Airtel may improve given the weak balance sheets of the competition. Also, the tail risk could lessen from competitors managing to hail the subscriber loss via the further potential fundraising. And I think Bharti Airtel is in a sweet spot, although the market expectations of potential relief coming through this will now be dismissed, but they're still bullish on Bharti Airtel, and on the back of that we can see Bharti Airtel up and away in trade again with the gains of 2.5%.
All right then, moving on, and let's shift focus to another ET Now news break that has been confirmed, wherein Maharashtra Housing Minister tells ET Now in an exclusive chat that the government is planning to slash the stamp duty in real estate before the festive season. Let's go across and listen in.
Our government earlier, like in COVID period, had given concession to the stamp duty, and because of that we got more revenue and lot of registration. The housing department, there was a good response from all the stakeholders, all the builders, and that's why we had given that time in COVID. Same thing we are planning to give some discount so that we get more revenue from this registration.
You planning to give, because the festive season is coming and after few days, a model code of conduct would be applicable. So can we infer that before that you planning to give some sort of discount?
We are discussing with the revenue department. Definitely once the revenue department and housing department come together and decide it, we'll be able to do it. But already as we have given 1% discount to the women's for ladies, because so that if there's some house has been taken in the name of the wife or sister or mother, they get a 1% discount in that.
So you're giving 1% discount to women and they may get more before in this upcoming festive season.
Yeah.
You are working on that proposal, sir.
Yes.
So one more thing, I just want to understand that in Mumbai, the real estate is the most costly real estate of the country. And one of the reason is the premium charges. So is there any plan to reduce the premium charges?
As we said, we are coming up with a new housing policy, and definitely we will be trying to reduce, because that is everywhere whenever we go for any conclaves, there all the stakeholders always say that there should be reduction in premium. So definitely we'll bring in our new housing policy, we'll try to reduce the premium.
And sir, what is the latest update on your new housing policy? By when we can see, and how much work has been done on the new housing policy?
Housing policy is already been completed. Only all the departments together, because it has to be decided by all UD, housing and all put together. So I think we will be able to finalize in next 15 days that.
All right, we will get you more details on that brewing story by Anurag Shah. But before that, let's quickly slip into a short break and then we'll be right back.
If you like this video, then like, share and subscribe to ET Now.